Hello, and welcome to Virtual Investor Conferences. My name is Cecilia, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Giga Metals. Please note, you can submit questions in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Mark Jarvis, CEO and Chairman of Giga Metals, which trades on the OTCQX Best Market under the symbol GIGGF and on the TSXV under the symbol GIGA. Welcome, Mark.
Well, thank you very much, Cecilia. And I just want to thank everybody here for attending and for showing the interest. Very interesting time in the market. We'll be talking about this later, but currently nickel prices have dropped down, and we'll get into perhaps a discussion about that later. But first of all, I want to describe our project. We came out with a very positive pre-feasibility study, which did everything we needed to do. Mostly this is to describe this project as accurately as possible and in enough detail that people thinking about making a strategic investment, and we're talking to large mining companies, we're talking to automobile manufacturers, that they can really understand what they're looking at. And we've done this in a very conservative way, with very conservative assumptions. So I'm just going to describe this to you right now. This picture is quite excellent because it shows, it shows our airstrip, it shows our camp, but it also shows the terrain. This is rolling foothills terrain. This is excellent country for an open pit mine, which is what we're talking about here. Standard disclaimer language. So we formed a joint venture with Mitsubishi Corp a little more than a year ago, and they invested in the project level. I don't want to sell stock to develop this project. It makes no sense to me. The math is wrong. The market, I think, in my view, the market doesn't at all indicate the value of this project. And so mathematically, you dilute less if you're diluting the project rather than diluting the stock. And so that's the approach we're taking. We created a joint venture company, put all the assets into it. It was a 100% owned subsidiary. We then sold Mitsubishi Corp 15% of that, and they put in $8 million, and that funded the PFS as well as some of our G&A. And here's some of the highlights. This is a really large mine that's being described here. 35,000 tons a year of nickel and 2,000 tons a year of cobalt. That's one of the giant mines of the world. And it's got a giant cost, US $1.9 billion to build this thing. But we can make a beautiful concentrate, 18% nickel, 1.1% cobalt, very, very low and deleterious elements. And we can make it for $3.85 a pound at the mine gate. This is a simple mine. You blast, you dig it up, you crush it, grind it, float it, and it's froth flotation, which is a 100-year-old technology. There's nothing, whiz bang about it. This is all old school processing technology, well understood from hundreds of mines around the world. Now, we also did a very successful geomet program, not to get too much into the weeds, but this may be the most important thing that happened in this PFS, because from all different parts of the deposit, all sorts of different chemistries and lithologies within this, basically 1 billion tons of ore, we can predict with remarkable accuracy how much our recovery is going to be of nickel, block by block in this thing. And the error bars for our recovery algorithm are very narrow. That is such an important de-risking step. So, it may sound a little bit in the weeds, but it is important. Um, so multiple product paths. We're modeling in this that we would sell our concentrate to a smelter at typical smelter rates, 78% payable for nickel, 50% for the cobalt. That's fairly typical. And the reason that we modeled it that way is if we were in production today, we could be selling to a smelter today. They would buy this. In fact, it's a premium quality product for the smelters. Um, but there are other processing routes that we think will be emerging that are a more direct route to the battery cathode. So if you took our concentrate, you could put it through a pressure oxidation circuit, a form of hydrometallurgy, and you could create sulfates, you could create mixed hydroxide precipitate, MHP, you can create MSP, you can create metal if you want ultimately by following this processing route, but really what you're wanting to do is have a more direct path to the cathode. We can sell it to a smelter. The smelter creates matte. You can then refine the matte, into cathode materials as well. But it's simply a less direct, less efficient route. We think the market's going to change over the next decade or so um, to encourage more nickel to go to the cathode because that's where the big demand growth is. Very large open pit mine, a billion tons essentially. Um, Very low strip ratio, which is important. And it's also a low carbon operation, low carbon intensity. And additionally, our tailings will sequester CO2, which is important. That's not measured into our carbon intensity right now, but it's a research project we're working on because the numbers are significant. Our tailings will sequester a significant amount of CO2 from the atmosphere. Here's the economics at our base case price. Um, and something that's a little bit odd is that our post-tax internal rate of return is higher than our pre-tax internal rate of return. And this is because of some government programs in Canada that encourage, the construction of critical minerals deposits. Now, the project is very sensitive to nickel price, and this is something that we'll be discussing again is the nickel price. We ran at a base case of 975, which is actually what is it? Something like 20% lower than the average price of nickel over the last 20 years, adjusted to $2023. Um, and you can see that the internal rate of return and the depreciated net present value go up sharply if you assume 15% higher price than the base case, and the values drop sharply if you reduce the price by 15%. And this low price case is actually where nickel is right about now. No sooner did we publish this and the nickel price started dropping. And again, we'll be talking about that, I think, a bit later. Because we don't expect this to last meaningfully. We expect it to last for a while. So we're in a very good mining jurisdiction. British Columbia is host to a lot of mines. We're in the joint Tahltan and Cascadena territory, two First Nations that are doing very well out of the mining business. And they're generally supportive of the mining business as long as it's done responsibly and protects the environment. So we're fortunate in that way that we're in a generally very supportive region. This is our resource statement. We're up to 1.5 billion tons measured and indicated. And then you add another billion tons of inferred to our total resource. The reserves, which is what we modeled mining in this report, are 950 million tons of reserves. So again, this is a giant mine. And where we have this resource is right where you see all of the, the horse trail northwest zone, where all the drill holes are. That's where the resource is. And we've got some resources, but not reserves in the Hatzel. We've got some reserves in the Duffy, and those would be mined. But all the rest of this is basically unexplored. Um, but all of the orange, blue, pinkish rocks, you can tell I'm not a geologist, they're all prospective. And we've got holes that are like 3 kilometers away from the resource, such as up in the Highland Zone, that are very similar to what we've got in the Horse Trail Zone. So when we talk about a 30-year mine life, that's for starters. We haven't drilled off all the rest of this. We've never had that kind of budget, but we think we've drilled 20% volumetrically of what we think is prospective. So this could be a mine that goes on for several generations. Simple, simple, simple. This is a very uncomplex processing flow sheet, and simplicity uh, is also low risk. The fewer steps in your processing, the fewer things that could go wrong. And that is one of the strengths of this project, is its simplicity and its very low technical risk. Makes a beautiful concentrate. This is a lovely product. And we've done hundreds and hundreds and hundreds of metallurgical tests over the years. And consistently, we're in the 15 to 21% nickel grade range for our concentrate. We can consistently do 18%, and we can have a very consistent product coming out of our mine. And that consistency is important, particularly if you're going to go through a pressure oxidation circuit. You like to know what's coming in the door in your pressure oxidation circuit. And that's a look at what our annual nickel production would be if we got this thing built. A lot of battery projects have been announced in North America. And bottom line is, I don't know where they're going to get the nickel. There's just not enough. And I think our project has to be built, and all of the other projects that are out there have to be built. And they have to be built with a design towards the cathode supply chain, or this electrical vehicle revolution. It's pretty hard to see how it gets off the ground without the raw materials. And that gets back into the nickel pricing question that we're going to wrestle with a bit later. Not that many nickel operations currently in North America. And you've all heard of the Inflation Reduction Act. Well, it's very supportive of development of critical minerals projects in free trade partner countries with the United States, such as Canada. And we think the IRA is going to have an impact on nickel demand in North America going forward. Now, by the way, this is the same presentation as is on our website. So if I'm going through it a little bit quickly and you want to review anything, you can easily go to our website to look at exactly the same presentation. Look at this. I mean, 3.3 million tons a year of nickel is the amount of increased demand by 2040 that they're estimating just for batteries. That is 120 new large nickel projects. So where are they? I know where a few of them are. I don't know where there's anything like 120 new large projects. And this is kind of interesting. If you look at the black line, that's the inflation adjusted price. And the average price is around $11 a pound. But you get spikes to the $40 a pound range. And when nickel spikes like this, as it does fairly regularly, anybody that's in production just absolutely kills it for 2-3 years. Now, I think long term, because there's a whole new demand driver for nickel, long term, when the next spike happens, which I suspect is sooner rather than later, um, it's going to settle back down to a higher low, just because there is that new, it's a fundamental shift in the nickel market. So just a quick comparison with the other main source of nickel is from Indonesia. And these are lateritic deposits that are being exploited in Indonesia. Indonesia has become the largest producer of nickel in the world as a country. We're talking about an open pit mine. It's a big hole in the ground, and it goes deep, but the surface disturbance is relatively small. I mean, this looks big, but compared to a laterite mine, laterites are not open pit mines, they're strip mines. So the laterite deposit is, say, 10 meters thick, 30 feet thick, goes on and on for miles. And in Indonesia, what they do is they just go in and mow it down. So you're talking about tropical rainforests getting mowed down so that people can get at the lateritic dirt and clay, which contain the nickel. That nickel then gets very aggressively processed using high pressure, high temperature acid leach. And in many cases in Indonesia, the effluent is simply dumped into the ocean. So, if you're sourcing your nickel from Indonesia for your electric vehicle, it's not like you're saving the planet by driving that electric vehicle. Also, the carbon intensity of this type of nickel mining is extremely high. So, you're mowing down tropical rainforests, you're probably destroying species. Nobody's really tracking this. And you're polluting, a coral-rich environment to get your nickel for your nice, clean electric vehicle. The comparison in terms of environmental effects couldn't be more stark with the way that we would mine. We paid a lot of attention to the tailings management facility with a big emphasis on safety. It costs more to do it this way, and we've modeled a much higher cost a tailings facility than we could have, but this is about as safe as it can be. And as you can see, this is what the main dam construction looks like. And then the bottom picture shows, a plan view of the tailings management facility. There's a tiny pond of water in the middle of it. The rest of that brown stuff, that's our tailings, that's our sand, which is exposed to the atmosphere so it can soak in more CO2. And we can measure how much CO2 is being sequestered in our tailings pile. There's a methodology for that. We're working to get that methodology, recognized and certified by governments so that we can claim the carbon credits. And again, carbon intensity of nickel projects, sulfide deposits are just naturally lower carbon intensity than lateritic deposits. We have gone from our PEA to our PFS, we've gone from 2.24 tons of CO2 per ton of nickel produced down to 1.77. We believe we've got a path to carbon neutral. But this is already extremely low carbon. Now, you'll notice that in the plans and catalysts, I haven't put any dates on this because everything depends on money. We've taken this project to a point where it is very expensive to do the next steps. We think to get to a final investment decision, we're going to need to spend about $50 million. And if you look at our market cap, we're at about 20 million US dollars, or pardon me, Canadian dollars. So clearly, we're not going to finance this by selling stock. We're not going to dilute our stock. What we're looking to do is sell a piece of the project to the next strategic investor, be it a car company or a mining company. We think it's unlikely to be a battery company because we've been talking to them and they're just too conservative to think about investing upstream in a mine. Uh, but the car companies are a lot more aggressive. They realize that, you know, 10 years from now, it's not even about the price. The price will be higher 10 years from now, but it'll be about availability. Can they even get any nickel at all 10 years from now? That's their concern. And so they're being quite aggressive. And we'll see where that all leads. But that is how we plan to finance further development of this project, is by selling a piece of the project rather than selling stock. Got a good board. Martin Vidra, our president, had a long career at Sherritt. He's an engineer, but he has also spent a lot of his career marketing nickel and cobalt products to end users. So Martin is leading our internal process about engaging potential strategic investors. He brought Mitsubishi to the table originally. I give him full credit for that, and that's what he is working on. That's what he does. That's his job description. But I also want to point out Robert Morris, one of our directors. Uh, about 2 weeks before he joined our board, he retired from Vale, which is the huge Brazilian iron ore company that has a huge base metals division as well, that is dwarfed by its iron ore division. But Robert was in charge of marketing base metals for Vale worldwide. He was an executive vice president with that remit. So like Martin, he knows all the end users and they know him. His portfolio of base metals was $5 to $8 billion a year, depending on metal prices. So we've got a pretty good team internally for running this process. I don't think any bank can match our internal talent. Here's our capital structure. Currently just under 100 million shares outstanding, 19 cents a share. The close was yesterday, I guess. And so just a extremely mispriced asset in our view. So I think we'll open it up to questions. Okay, here's one. Can you provide your thoughts? This is the elephant in the room, as I was discussing. Can you provide your thoughts on current nickel pricing, the driver behind the drop in price, and the catalyst for rebound? Very good question. We've been thinking about this a lot. Martin is kind of an expert in the nickel market, so I get really good feedback into these kind of questions. Basically, the Chinese have overbuilt in Indonesia, and that's where that's where the oversupply is coming from. So they've overbuilt both in nickel pig iron, which mostly supplies the stainless steel market, and they've overbuilt in HPEL. And so, at the same time as there has been a slowdown in China, everybody was expecting a big bounce back in China after the COVID restrictions lifted. Didn't really happen. And so China is, it's gradually starting to pick up right now, actually, but it didn't have the big, breakout kind of growth that everybody was expecting. So combination of things, the market is in oversupply right now. However, if you look at the increase in demand growth just from the electric vehicle business, it'll chew through that oversupply. We expect headwinds in the supply-demand equation for about another year. And then the nickel price just chews away. So, what's the catalyst for rebound? Demand growth. It's that simple. And it's there, it's real. I mean, it's just amazing, this whole electric vehicle story. People are a little disappointed now, but don't lose sight of the fact that predictions that people were making about electric vehicles 5 years ago, even the most optimistic ones, the reality has blown it away. So kind of interesting. And the people that we're talking to don't care what the price is today. They care what the price is 5 years out, 10 years out, 20 years out. And as I've said, some of them care about, will I be able to get any at all? So that's the background. So to me, this low nickel pricing environment, which has affected our stock price, I think that's opportune for prospective investors. So another question: milestones for 2024, and do you see any headwinds? Well, the only headwinds are the oversupply of nickel that's current, um, and um, the main thing I'm looking for is to be able to make an announcement about a new strategic investor. That's what we're really focused on. That would be big news. It would be a milestone that would be really big news. Um, Another question: are we getting more interest from OEMs or battery manufacturers? As I mentioned earlier, um, the battery manufacturers that we're talking to, we're having really interesting discussions, and it's really interesting for us to learn the whole ecosystem of the battery business. Um, but they are very conservative, the ones we've talked to, and I just don't see them investing upstream, quite honestly. But again, the OEMs, much more aggressive. And then there's mining companies, there's processing companies as well, that want to get into the PCAM and CAM business, that will need some sort of guaranteed supply of raw materials. uh, Another question: can we tap the IRA program for your project? Yes, theoretically. Um, and we'll be looking at that more seriously when we get into the next round of development. We have to have the outside capital first. We can't look to the government to pay for all of our next steps. But certainly, once we get the outside private capital in, that's the time to look for that to be supplemented by the IRA, but also from Canadian initiatives as well. There's a $1.5 billion infrastructure fund that's been announced in Canada. We're applying for some of that for the power line and the road, and that would be very helpful for us. It would also send a very positive signal to the international investment community. Um, Here's a question: what kind of reaction have you received from strategic investors since you filed the PFS? Well, it's been very positive. We went, Martin and I and Lyle Tritton, who's our engineer, went to Tokyo, and Mitsubishi is being extremely helpful with this whole effort to get another investor. And they want to put together a whole consortium, not too many investors, but maybe three, maximum of four total investors in this mine over time. They want to put together the whole battery supply chain. I think that's their vision. And I have to say, Mitsubishi Corp is unbelievably good partner. Boy, they're putting a ton of effort into this project. And so we went around and were introduced by Mitsubishi to companies in Tokyo, Osaka, and then we went to Seoul, South Korea with Mitsubishi. And so we're meeting big companies at quite a high level within the company. It's really, really remarkable. And this was well received. This PFS is conservatively done with conservative assumptions, realistic assumptions, we think. And people appreciate that. There's no fluff here. Um, okay, there's a question here about different cathode chemistries, um, because there's not enough nickel around. Makes this particular investor nervous. Fair enough. There's two main chemistries. One is nickel based, and one is LFP. And LFP is a good technology. Um, However, it's heavier and less energy density, so you don't get the range from LFP. It's great for a little town car, a little commuter car, something like that. It's good for taxis, buses, that sort of thing. But if you want range, you have to have nickel in your chemistry. And similar to the sodium batteries that are coming forth, the sodium batteries don't really challenge the nickel-based chemistries. Uh, they would be more of a challenge for the LFP. They would fill a similar niche. You just simply, without nickel there's no substitute for it if you want energy density. It's that simple. It's physics. And there's no magic answer to give you that kind of energy density with anything else other than nickel. And I see we've reached the end of our time. So I'm going to thank you very much for attending. Again, if you've got any questions, feel free to contact us. And, good luck with your investments.